Welcome to TradeTheMBI.com. This is John. This report is for January the 3rd. Happy New Year again to everyone. And, coming off of our mixed signals that we were getting here from our INX, which was showing a lot of bifractals going into the fiscal cliff. And then on Monday, we ended up getting also the catfish and extreme fractal buy signals. And boom, price just gapped all the way up to the target and then some. Pretty straightforward play on that. But you can see that we even had from our power momentum back it was right at the end of last week, positive movement, even though price was declining. And then, again, it was that unfortunate situation with our stop being 2.5 points away on the futures. Otherwise, we would have had the pretty nice upside move. I know some people who did catch it. I mean, I even showed on my live broadcast that I turned around and got back into the setup overall. But needless to say, we're starting a new year, so everything starts over. This isn't the greatest setup. You can see last time we ended up with this setup right here, yellow being below the orange. We had a red dot short at that particular point, but similar setup right here. Coming off this, not overbought yet from a reading, but so darn close. So maybe a little bit more momentum carries it through, but it's interesting. Our first opportunity may be a short into the new year going forward, or at least being a little more defensive. It's pretty extraordinary up push. Not shocking. It's just one of those things. But again, it just where are all these different supports? You gapped past them all, and so they really didn't have a whole lot of relevance. Did pop back outside of the Bollinger Band, so from a deviation standpoint, that was a crazy amount of movement. Not enough of a reading yet to be able to see any shorts whatsoever starting to get into this setup, so not there yet. We did see from our 2020 that we had even back on Monday, continuation of that setup. And it's interesting because if I bring up the weekly chart, but before I do that, MACD. Okay, so MACD sellers come in right at a time where we were looking that it was a good opportunity to start thinking about getting in fiscal cliff setup, and now we're getting a buy from them. So that could be our sell signal. Maybe get a day or two float across here with the momentum before we start to see some pullback as they sell and take profits into new buyers coming into the overall setup. But let's put up our weekly, because this corresponds to what we had talked about way back over here weeks and weeks and weeks ago. So those of you that have been with it, you knew our targets. 1454, got all the way up to 1462. We also had a lower one at 1452, and then the granddaddy of them all was the 1474. A little far away week-wise from this original one, but certainly we were expecting it for this 1454 within this overall setup within our 6 bars. It's amazing, but it does it. Gets there within the range. Go figure. SSO, now this is an interesting one because people were asking me about, why we had to, seal the number at that. Well, from my accounting standpoint, I had to lock in where we closed out at, because going forward to the new year, in order for that to count towards last year's gains, I have to then take it from the 60.28 and count it at that close from the end of the year, and then going forward now at the current value. And so what would our scenario be for selling right here? 62.21 would be the ABM setup for that. So, and then what you're going to see probably starting from after today, it may even take into the weekend, but from there everything will be reset. So we'll be starting with the base number going forward. Does that mean you have to adjust? No. For those who've been following for years, I would imagine that you've got a considerable markup, considering this was actually our poorest performance year out of the last couple. Last couple of years were over 100%. We would have been close to the 70s had that futures setup gone just the opposite direction. By 2 points, we would have definitely had well over 70%. So, that happens. It's trading. C'est la vie. So that's a good point right there. You can see we had the positive extreme to open it up, retraced it. That's positive. That's actually very good. Look at that shakeout reading, 59. Gosh, I have to go back and look and see if I can find one that is that high. That's pretty incredible. But slightly bullish setup from this viewpoint. Again, when you have the yellow and the orange, but typically you would expect to see the orange below here. for the little bit more of a negative. So the fact that the orange is riding so much higher shows the real bullish strength behind the overall setup. Gold, that puts in a pink dot show me, and that comes in typically right around what we would consider slightly overbought setup. The fact that shakeout's back into -9 means there was a nice solid move into it. We should take a look at what that up-down ratio is. 124, 231. It's only 53%. That's not bad. So it may take a little bit more to get that fraction overbought. USO, slight retrace. We don't have a USO position at this particular point. Nothing to worry about. CLF, however, was slightly different. Let's put up a CLF. I don't have a CLF there. Let me grab one from here. Just click the button and we go. Alright, so we had capped out at selling 37 calls. And so that would be the basis. So those go through the end of the week, which is why for closing that one out from a year-end standpoint, we'll see where it ends up. We had good reason to believe that we would potentially start to see a retrace, and you can see it did in fact do that. However, higher positive extreme, even though it was lower close. So this is not horrible to see that, though. Plus 26 on the shakeout. You're beginning to get into that front. So maybe you only get a portion of a retrace into there. We'll see how it plays out for our remainder of the week. X, which we still have. So let's take a look there. So what I'm going to have to do is adjust the cost basis to the close at the end of the year, and then we'll start off with that being the cost basis for the couple of shares that we've got on that setup. And so that little variation, it's just what we have to do from an accounting standpoint to be accurate. Super positive extreme though, and also not overbought from a power up-down power setup overall. We should put a power momentum on that. I'll do that for the next day's chart. But everything we're seeing the same configuration where we've just gone off the reservation here, moved on to the new highway as I like to refer to it, and it does set up the possibilities for just a little bit more of a momentum move before we get some degree. I'm starting to see a lot of different short setups overall. Going through the WLT, we had our largest position going into the new year. We still had 600 shares. What I want to do is sell 300, and what will happen with this situation is this too, the cost basis will go to the end of the year, which would be right back here. So effectively that's where the cost basis for the new portion of this year will be. However, we want to have a stop at 37 for half of it, so very good potential that that could get taken out very quickly, and that's fine. That would still leave us a 300 share position, and we have to reduce that size in general just because it would become way too overweighted with the fact that I have to reduce the portfolio. Do you have to reduce your portfolio like that? No. Doesn't mean you shouldn't sell portions, particularly with the gray dot short setup. That means at least a retrace of the low down here, which is 3612. So keep that one in mind. No need to get excessively aggressive here. So you can see there was our target from the future standpoint, and boom, popped up, nailed that perfectly. So that was fantastic. It's just that slight little extra drawdown that was just enough to capture us within that setup. But here, this gives a little bit clearer representation of this setup, and again, that is not the worst thing in the world, but it's just what's going to happen is we're likely to see overbought develop very quickly here, and we're going to need to see some type of retrace. We're not positive by any means, only minus 12 from the daily, from the future standpoint. So, that's not horrible by any stretch of the imagination, and very nice strong pop off the beginning of the year. And gosh, you kind of capture a lot of the gains that January is supposed to produce all just in the one day, and that's going to make things a little bit more challenging, I think, probably for some as we start out this new year. You know what I did want to point out? Got a couple of emails from a member who had been, and we've seen some of his work before because I've put it on the website for Apple. And here was a strategy he was working with from the MBI Opus. Now, see, this just points out taking things to areas where I hadn't anticipated. I'd always just utilized the MBI Opus from a daily standpoint, had not looked at it from an intraday. So here was a 5,000 tick of the ES that he was running. And what I will do is put the settings on the website down the same portion where we had the Apple ones. And you'll be able to take a look at these. But that is staggering. Took out a 5,000 tick with a 2.56 profit factor. That's just stellar. 83% win rate on that. That is crazy good from an intraday. And then another one. This one was a 10,000 tick chart. Look at that, 387, 87% win rate. And this is just from a very short time period here. So 6/14 through now, so 6-month period. That's pretty darn insane if you ask me. But this just shows you that, taking the time to work with the indicators that you've got and utilizing them, takes it to even places that I wasn't expecting that it could go. So that's fantastic. And kudos to those of you who, work with this stuff, because there are so many machinations and variations that I can't even go through them all. But that's why I wanted to create the programs that give you some of the flexibility that allow you to do some of these optimizations. And I'm working to continue even more of those, like with our daily trend trade that we run. And in fact, where do I have one of those? Well, here's a version I'm working on getting to too, which is like this is the Apple 78-minute, which is variation of the daily trend trade, looking for a portion of ATR moves in this particular case. So always going to keep at it, and look for me tomorrow. For those of you with the indicators, I'm going to start probably much earlier than I did today. I almost have the kids back to school. They start next week, but we're going to be going through a lot of the different indicators, putting a series of them together, and really starting to talk about the relationships between some of these individual setups and how they relate, and why I started putting up the power momentum when I did, to really kind of indicate when we were expecting to see a turn and getting closer. And this is why I don't always inundate you with all of the indicators on one chart at once. I look at them because I have several charts where I'll go through and see them, but I try to only give you the most pertinent of details when going through some of these things. And always worth noting, that's why we put them out here, so that everybody can see them. And it's nice to know that we have a community of those of you who have the indicators, starting to work with them and really get into the nuances of them. So I think that's exciting stuff, and we'll continue to explore a lot of those details. I did note that I was looking at my 30-minute ES, and ended up with another red dot short there right at the close of the market. That was at the 1500 bar gap. So we actually saw that on several different stocks. Apple was one of them, though. Put that one up there. But we were going over a lot of the 10-minute signals. And this was an interesting one because it started off with these up targets. Part of them got met right here, but not the long green ones. And then the short came in, and then we ended up with another green dot that had reached its target. But we got the short signal in before it had reached the target, but you got to reach your target on these before that short. Now, these had well passed their 6-period run. So it's when this 207 came in, it was a much stronger overall short signal for that. And it, lo and behold, just as they hit the exact retrace target, completely turns around, and then you end up with the green dot. But some good things to point out intraday, watching the lower shakeout, give way a little bit, kind of reset, and then just pretty much trade across. But still stayed fairly positive with your power momentum, keeping the cyan above the yellow. Here was your weakest point right here, and another one right there when it had its little cave-in after that. It was fairly strong throughout. So always good to run by these signals. I was looking at, and I was going to start running through Dow 30 to see if there was any particular weakness in some of the things. I know some of the highfalutin stocks that we tend to follow and stuff, like PCL, are starting to put in short signals. So that's worth noting because you start to see those develop on the periphery, and then it becomes a bit more of a cascade. You end up with more downside pressure overall in the market. So your upside may be muted, and then you begin to flip over as a lot of them become overbought. So always worth paying attention to. Continue to look for me though on StockTwits Twitter. As always, though, trade well.